This is our weekly roundup video of everything that's been happening here at Cloud 360 Accounting over the last week or so. And there's been lots going on over the space of the last week, but essentially since the start of the year, there's been plenty of things happening, plenty of new client stuff going on, good results we've been getting for some clients on various service delivery, and changes internally within the team. So last week Marisa left, so we are in recruitment mode again at the moment, and we have a couple of new people coming on board actually already in the month of March, and we've got 2 vacancies there at the moment. Office administrator, which closing date's actually today, and we also are looking for a payroll administrator as well. You'll see both of those posts on our Facebook page. Over the course of the last week in particular, some of the things we've been working on is various company year-end requirements for our limited company clients. A number of those are December 21 year-ends, and the accounts were essentially drafted during the month of January, and with some final review meetings and final adjustments, we're getting sign-off on those this week and probably at the start of next week on a few of those as well, and more of that to come. We spoke to a prospect this week who we've been talking to since before Christmas, and between ourselves and the prospect, we decided now's not the right time for them to make a massive change to their current financial procedures. Even though we know it's going to be a massive benefit, and the prospect knows that as well, there are too many other things I think on the go in that person's life and in that person's business that to throw more change into the mix would make something kind of fall, and we don't want that to happen. So we're going to revisit that in a couple of months' time, probably around the start of the tax year, and see what we can do from there. But as part of that, we actually found a solution to a problem the prospect's having in relation to weekly time and payroll entries and so on. So we've been talking that through with them so they know what the solution is going to look like whenever they come back to speak to us again in a couple of months' time. I was working with a charity client of ours, getting the year-end wrapped up to be passed over to an auditor. Some of the rest of the team were wrapping up some month-end stuff for January for a few clients in terms of monthly report packages and getting those sent out to the clients. So all in all, it's been a busy enough week. It's been a busy enough sort of 6 weeks, and hopefully more to come. One thing that came up this week was something in relation to a current client as well, and it brings to mind the sort of nature of accounting services, and sometimes I think the mistake that we try to remove when we do some clear and transparent pricing reviews with clients. So a client we've been working with for a couple of years, their business was in difficulties whenever they came to us. Things have improved since then, but they're still incurring some losses. And during the course of that period, they reduced the level of services that they wanted from ourselves, and also a couple of their finance people who were on board with them have moved on as well. And the client and the existing team have been kind of trying to muddle through with their own bookkeeping and not doing a bad job, but getting stuck quite a lot and causing themselves a lot of time, and we've been jumping into support. And I remember having an honest conversation with the client to say, look, I think you need to invest more in the finance end of your business. And this week the client actually said, you know what, Kieran, you're 100% right. So the question some people do ask us, sort of coming off the back of that conversation, is how much do you expect to invest in your finance function? And the finance function in your business is going to be maybe your own bookkeeper or somebody who's admin stroke finance related in your business. It mightn't be all of their salary, but if you took all of their salary plus what you're paying your accountant, then what you might be looking at is, we did recommend somewhere in the region of 1.5% to 4% of your annual turnover. So if your business is turning somewhere in the region of 200,000, anything up to about $8,000 a year for accounting and bookkeeping needs is what we think you should be spending on your business. It depends on how much you want to invest with your accountants or bookkeepers, or with a digital finance team like ourselves. So you might want to talk to us 4 times a year or 12 times a year, and the level of investment that you're making is going to determine the level of service that you get. But the more you invest, the more service you get, and actually the more results you get as well, and the more time you free up for yourself. So just something to bear in mind if you're thinking of reviewing any of your costs and maybe areas that you need to cut back on or invest more on, but try to understand what that means as well. That's it for our weekly roundup, and I'll try and do one again next week.